We are nearing the new year, which means that it is time to tie up any loose ends and start making plans for 2020.
Yeah, that includes your finances, and tax season will be here before you know it. But can you actually start saving money now? Karen joins us in the studio with some tips from the experts. Good morning.
Good morning, ladies. Well, you know what? Let's face it. Many of us don't like paying taxes, right? And we all want to save money. A financial advisor tells me if we start making tax moves right now, it can help increase our tax break before the end of the year. As we prepare to say goodbye to 2021, experts say we should also be preparing to review our financial goals. Casey Marx from Crown Haven Wealth Advisor says that includes tax planning.
A lot of people think that, taxes are due in April, but a lot of these tax changes that you can make are actually prior to the end of the year.
Marx says to help lower your tax liability, contributing to a charity is a great way to get a deduction.
If you wanted to, you could contribute as much as your pay and deduct that from your taxes. So it's an extremely rewarding thing to be able to do.
This is for taxpayers who itemize deductions. Cash contributions must be made to a qualified charitable organization. Taxpayers who claim a standard deduction can claim up to $300, $600 per tax return for those married filing jointly. And don't forget those receipts to back contributions, regardless of the amount. Secondly, to reduce your tax liability, Mark says, take a look at your retirement accounts like traditional IRAs or 401ks.
They can do what's called a Roth conversion, which is where you pay taxes on those tax-deferred savings now, but then you get the benefit of having tax-free income distributions in retirement.
Or do you think most people are concerned about the upfront tax or fee that you have to pay?
I think folks are afraid of paying the taxes up front because nobody likes to pay taxes. But when you do that in a measured way, you're then allowing your money to grow in a completely tax-free environment, and then you're able to take those funds out tax-free later.
Thirdly, if you are retired, age 72 or older, don't forget about the required minimum distribution from your retirement accounts each year.
If you don't take that from your qualified account, from your IRA or whatever, there's a stiff penalty. It's 50% of what it should be.
So just a quick note, that requirement he just mentioned, that was suspended in 2020 but activated for 2021. So here's something else. If you're a homeowner, you can make an extra mortgage payment on December 31st. You may be able to claim that additional interest paid as a tax deduction in the tax year paid. So a lot of information to go over here. That's why we have the full story for you on WTHR.com.